Well, with U.S. stocks closing back in on their all-time highs, we do think valuations as compared to a composite of those stocks that we cover are getting to be too high at this point. So in my opinion, I think the upside here in the short term is probably pretty limited until we see earnings, start to catch up with valuations. So we may be a couple quarters out before that starts to happen. In fact, when I think about the dynamics in the U.S. stock market, I think the U.S. stocks really are just priced to perfection right now. I mean, even before the recent election we had here, we had a lot of tailwinds behind us. The market was already pricing in moderating inflation, expectation for declining long-term interest rates next year, ongoing easing monetary policy, not only with the Fed, but with the ECB. And then we had China kind of follow on with their own fiscal monetary stimulus. And of course, now following the US elections, pricing in a much higher probability of tax cuts, people anticipating a looser regulatory environment. So with the market right now, it's trading at about a 5% premium to composite of the fair values of those stocks that we cover in the US. That's well over 700 stocks. Now, a lot of people may say, well, 5% doesn't necessarily sound like that much. But if you look at that price to fair value composite going all the way back to 2010, less than 10% of the time have we traded at this much of a premium or more.